Hello. Well, we are back at our live report for midday Cinco de Mayo. The markets are crashing. The stock market gave back everything plus what we gained yesterday, and mortgage rates are spiking to where we were before the Federal Reserve announced, and even going higher than that. So I thought I would share this with you guys. So yesterday was a complete success. We had over 100 people watching the live video, and I just went in here just to basically let you guys know what the Federal Reserve did. But let's get over to the news right now. So the stocks. I'll preface it by this. I wish people would just shut up and let Federal Chairman Powell do what he does. It's his position to go out there and tell us what the Fed's going to do and everything else. But you have a lot of people chiming in the background, saying things about other things. So without further ado, let's just go over to where the markets are right now. If you see this chart, if you watch me on a daily basis, you know what this chart means. This is terrible. Basically, here's a 2-day chart. Let's look at this. This is crazy. Okay, so we started here throughout the day. Okay, this is what we call the MBS market. This is what we follow as mortgage professionals to give us insight into what's going on with mortgage rates. Okay, this is the price of a mortgage-backed security bond, and the yield of this bond is the biggest determinant of your mortgage rate. Okay, so when we look at this, basically, as this price goes up, which we did yesterday after the Federal Reserve came out and said what they said, the markets rallied. They liked the certainty from the Federal Reserve. They came in and said, we're not thinking of raising rates by 75 basis points. We're only going to do it by 50 basis points. We're going to continue to do that as we monitor the markets. So we saw right here, this is when the Federal Reserve announced it. So what happened right there is the markets crashed, okay? And then the Federal Reserve came out and gave clarification. That clarification then had a rally in the market. This was yesterday, last night before the market closed. You can see all these little cells up through here. You can see better. Basically, all these are signals to me and down through here, letting me know what lenders are doing. So when you see this little blip here, it's going to tell you something. So you can see that their PCMC, or what is it, FGMC, their rates got better today. So these are, again, I'm a mortgage broker. I monitor over 130 lenders, and this is telling me what lenders are doing specifically. So we go up through here, and you can see that First Savings Bank got better, Allied Mortgage got better, eMortgage got better, Cardinal got better. Everybody got better last night. Okay, then the market closed. And then this guy comes out this morning and starts putting some little bit of skepticism in the system. And now here's what we start to see. Morning update, and then the market just plummets. So now what are we seeing? It's the flip-flop of what we saw yesterday. Now here's what's coming in. This place, Gateway, just got worse. Pricing, Home Point Financial, Change Mortgage, all these companies, United Wholesale, blah, 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 blah. So these little dots here signal to me that lenders are doing something. That something right now is raising rates. So we had a nice reprieve basically from about 1 or 2 o'clock yesterday through the market close. And then usually my expectations were that we would come in about this range here. Why? I knew there'd be some profit taking. It's like the Dow going up 1,000 points. Well, what's the Dow doing now? Well, it's down 1,000 points and growing. You can see it right here. The Dow's down almost 1,100 points. Basically, that's what we got yesterday. We picked up yesterday. We lost it all. Same thing with the S&P. Same thing with the NASDAQ. So everything that happened yesterday basically reverted itself back to where we initially went. And here, again, Dow Jones is down 5%. One of the biggest moves in a long time. And then you go over here and we continue to see the markets crashing. So if you guys want to ask questions, I did post a comment section on my YouTube videos. It was overwhelming that everybody wanted me to do live events. I'm going to do those every Tuesday at 1 o'clock, and I'll be on here as long as you guys need me and have questions. So if you have any questions right now, post them. Otherwise, I was just going to do a quick little blip to let you guys know the markets are crashing. We did lock a lot of people right through this range yesterday if you were pending here because we had a little bit of a reprieve, and I knew we would give some of it back. Again, what happens, let's think of the stock market. The stock market goes up 1,000 or 1,100 or 1,200 points. Usually the next day it gives back a little bit of it. We usually don't give it all back within, by morning. And then we also did the same thing with mortgage rates. You can see down through here, there was a little blip in the radar that Fairway Lending, posted here. I don't know where that came from, but you can see almost all lenders right now are posting to the bad side. Down through here, if you can focus down here, it says so far today, 22 lenders have increased their rates so far. Okay, so I'll answer any questions you guys have if you have any. Got to put my cheaters on. I'm old. Let's see. Any chance that the note rates are going to go down anytime soon? I honestly, the zigzag of what's going on right now is unprecedented. We usually don't see this big a move. The normal market move is maybe 8 basis points. We don't usually see 80 or 90 or 70. So I hate to say it. I thought with the Federal Reserve coming out yesterday, putting a little bit of taper on the markets, it would kind of cap the bleeding in this market, but it didn't. So I still think that we should be stagnant at these levels. But here's what will probably happen. It's a bloodbath right now. It'll probably settle. Everybody will come to their senses, and then we'll have a little bit of an uptick move. So, but this is how volatile the market is. This is why we ask you guys to put your application in. Let's lock, and then, or if it's a short-term duration of time, you only need 60 days to purchase a home. We're going to monitor the market. So let's say yesterday, if you would have jumped in or you put an application in, we probably would have locked you in by the end of the day, knowing that we're going to close you within 30 to 60 days. Most of the applications we have right now are long-term locks. They're mostly on average about 120-day locks, or they're doing lock-in shops. And that was a huge success that we went over yesterday. So just to give you a recap, if you're building a house, we can lock you up to 180 days for free. There's no cost. There's no strings attached. There's no, I always say, skin in the game. If you're building a house, if you're looking to buy a house, we have a lock-in shop. Lock in now. Think if you would have locked in yesterday right in this range. Your rate's probably going to be 1/4 to 3/8 better than where it would be down in this area. So that's how the lock-in shops can help you. So if you need any assistance with this, please reach out to us. Let me put a little banner at the bottom so you have all of my information. But let's go back to the comments. So yes, I think let us do your thinking for you. If you're in the market right now to buy a house, let us work with you and guide you through when we think you should lock. If you're building or need that lock and shop, please call in, because there's some details behind that we really need to discuss with you to make sure you know what you're getting into. There's not many caveats behind it, so it's a great program that just people are missing the boat on. The next thing is everything is about a rate question, which I get it today. What will mortgage rates be today? Well, they move all day long. So let me explain how mortgage rates work for you. Let's say this is a stock. It's the best way for me to analyze this. Let's say a stock. So it moves all day long. You as the consumer, you don't see how many times mortgage rates move throughout the day. Usually it's not that volatile. Think of a stock. Usually the stock might move a little bit every day, a little bit up, a little bit down, a little bit up. That's the normal market with the MBS market. And again, the MBS market is a bond that trades on Wall Street. Okay. What we're looking at here is the price of that bond. So as the price goes up, you're paying more for the bond, you have a lower yield. Well, because it's a mortgage-backed security, this is the mortgage yield, the mortgage rate. Okay. As this deteriorates or the price goes down, you're paying less for the bond, it drives up the yield. So the equilibrium on all this is where, supply meets demand. Okay. So rates change all day during market hours. So if the stock market's open, rates are going to change. So for example, let's say last night you called a lender. Let's say you called Keystone, whoever that is. And they said, oh, the rate today is, I'm just making these numbers up, 5. Okay, cool. Well, you procrastinated, or you called me and I said the rate's 5. You procrastinated, didn't apply, didn't put your information in. What happened? Market deteriorated. Now you call in and we say, well, the rate's 5 1/4. Well, wait a second. Yesterday you said 5. I know I said 5, but it's like your stock. If you checked out Twitter stock, that's a bad example right now in today's world, but the price changes. So when you need, or when you decide that you want to act, you got to act, because 5-10 minutes, a half hour is a duration of time right now in this business that the rate's going to probably move up or down. So give us the ability to monitor this for you and grab these the volatility in the market to assure you guys that you're getting the best rate at that time. Okay, so let's see. But again, guys, this is like timing the stock market. But I'll keep it at that. Let's see the next comment. Let's see. So should I wait to get a mortgage? No, wait for why? No. Okay, so here's what we'll do for you. You apply online. Go to therateupdate.com. You're going to apply. We're basically within the next probably 2 to 3 weeks, we'll be all over the country. We'll be able to do loans in New York, Utah, Carolinas, anywhere out there, we'll be able to help you. So right now we're accumulating that data. So when that licensing and everything comes through, we'll be able to provide you those services. But apply now. Okay, we're a broker. So we're going to we'll get you approved. And then if we see this happening, we're going to lock you. Okay. And that's what we're going to do. So we're going to advise you on when you should be locking and all the options that you have. Similar to your stockbroker. You say, hey, I like Google stock. Well, if they do their due diligence, they should check into it, see what the patterns are, see what's going on, and then advise you when you might want to pull the trigger on buying that stock. Kind of the same thing with mortgage rates. So don't put it off, because the inevitable is coming. I mean, rates are they spiked huge in the last 60 to 90 days. They should start to taper off, because we're starting to see some cracks in the system. The employment numbers came out today and they're bad. The production numbers came out today and they're bad. Wages are going up. So we have higher inflation. The economy's starting to cool off. I'm just concerned that the Fed's going to overreact, and then 3 to 6 or 9 months from now, they might have to start easing again. They did that a couple of years ago. So, everybody overreacts, and that's the problem that we have in a lot of areas of the markets. So the next question, will we see, I say yes. I see mortgage rates getting up to 6%. Once they hit that mark, I think a lot of people are going to start freaking out. And then the federal government and the Fed and everybody else, lenders, banks, and everybody's going to come back, and they're going to help resolve something there. Okay. What I mean by that is, normally the Fed and the government and banks come up with a plan B. And you got to remember, the big banks, they have a big voice down in Washington, D.C. Part of Citizens United was saying, well, money doesn't influence. Well, yeah, it does. That's why the lobbyists are paying are paid billions and millions and trillions of dollars to do what they do. So I'll get off that pedestal of the government part. Okay, but yes, I see rates hitting 6 and kind of stagnating from there. So yeah, my tunes change, but I change with the times. The next thing is, any correlation on Supreme Court leak and stock market? I think this, I don't like to get political, but I mean, these leaks, now everybody's freaking out. Now it's from the Supreme Court. Well, also, I don't want the president's phone calls being leaked. That's my preference, and I'll leave it at that, because I don't want to get political. There shouldn't be any leaks in Congress or in the government. But people pick and choose what they want to post out there. But happy Cinco de Mayo, guys out there. I know my wife's making tacos tonight. I don't mean to be stereotypical. My last name is Frio. I'm not of Hispanic descent, but yes, and I know my last name means cold. Let's see. Why did my bank quote me 6.5 for mortgage? I'm considered a VIP depositor in Los Angeles County. I don't know. It might be. Here's what comprises your rate. It's the yield on this mortgage-backed security bond, but it's your credit score. It's how much the house is valued at, how much money you're putting down. That's usually and what kind of property it is. So 6.5% might be on a mortgage that you have a rental property and you're pulling out cash. Can the rate be 6.5%? It can be. It could be on a second home. So investment properties and second homes have higher rates. Fannie Mae and Freddie Mac, the entities that control all of those, about a year ago came in and they jacked up when I talk about pricing, I'm talking about interest rates. Okay, so when I say the price went up, I'm meaning rates went up. So what they came in and said, we're going to jack up adjustments on second homes and investment properties and cash out. So they did that about a year ago. That's one area where I think they're going to come in and pull that adjustment out. They made a 2.5% adjustment to all the intricate pieces of these loans, driving up their rates basically substantially. So that's a part of the market where they should be pulling out of to just ease the market and ease rates in that area. But if you'd like to email me or send me a copy of the loan estimate that you had, Eccentric, and my email address is Dan. Here, let me see if I have a banner that has my email address. Yeah, I do. And I'll hide this one. Dan@therateupdate.com. Please send me your loan estimate, because what happens is when you applied for the loan, the lender locked you in and gave you a rate. They sent you a paperwork back, and in there there's a loan estimate. It's a 3-page document. You can send me your whole package if you want, and I'll review it and see why you're getting 6.5%. There might be a good reason. You might be just getting hosed. So send me whatever you need to that email address down below. I would love to review it. And if you do it here shortly, I'll probably have something back to you within the hour. So thank you for that. Let's go to the next one. If you guys would, give us a thumbs up. Give the channel some love, guys. I'm here to answer any and all the questions you have, but I need a little participation. If you would, put a Q in front of your question so I know it's a question. But if you could do me a huge favor, I'll ask you one thing. Just give the channel a thumbs up. That helps the algorithms with YouTube saying, hey, this is an informative channel. People are liking it. People are participating in it. We're going to help get it recognized more. So thanks for doing that. If you would do that for me, I'd greatly appreciate it. So please send me that quote over. How do you think VA will be affected due to all this? And where do you think they'll be at the end of the year? I think rates, let's just go out for 60, 90 days. I think rates are going to teeter right around 6. They're going to bounce, and that'll be our threshold. If you just heard the want, another person or another bank just came in and raised their rates. So this is live, guys. This is my ticker live, and I'm watching it with you guys. This guy came out earlier and messed up the markets. But let's VA rates. I don't know. I'm not saying loans, but I'm assuming you're saying rates. VA rates will be affected. Yes, all rates. So we're talking about conventional financing, government-sponsored loans, which is FHA, VA, and USDA. Jumbo's not so much. It's a different piece of the puzzle, but yes, they're going up as well. So is ARMs. So all mortgages, all lending in the residential mortgage side is going to go up. Then there's things that was bad English. There's things called, or programs called non-QM. Those are usually very stable because it's private money being lent to you. Those are also going up substantially as well. So if you're contemplating refinancing or buying or whatever, you're never going to time the market perfectly. Do it. I would do it now if the math makes sense to you and for you. I'm currently under contract with new construction. How does a lock work? How will be done in 6 more months? We have a 180-day lock. So it's 6-month lock where we can lock you in today, and it's good for 6 months. How that breaks down is we take the current rate today, and I'm not the lender, but they add about 0.25% to that rate. And that's what your rate is. There's no skin in the game, meaning you don't have to send in a check. You don't have to do any deposits or anything. You have to apply with us, and you go to therateupdate.com. There's my number down below, but the website is therateupdate.com. Go there and apply. As soon as you're done, or you're going to even chat there or even schedule a meeting with somebody. But as soon as you're done, we're going to call you and it's a fact-finding mission. It's not a hard sales. We just want to talk to you guys and say, what are you looking to do? How, when we want the intricate pieces of this puzzle. So in your case, Joel, we would lock you in. But the good news is this: if rates go up, you're locked in. There's no worries. You don't have to worry about anything. You're locked in. Well, what if rates go down? Well, we renegotiate with that lender, or you can see over here, I work with over 130 different lenders, and this is all the orange pops going on. I move you to another lender at that time that has a lower rate. There's no harm, no foul. I'll just send you new disclosures. It's pretty simple. I already have all your information. All I got to do is take up your package. It's electronic anyways, and move it over to another lender. So that's how that works. But yes, all mortgage rates are going up. Next one is 5.62 just came out. Did it? Let's go over to another piece of the puzzle that I use is here. MBS, check, we'll see what their rates are. Yep, you're right. So you probably subscribe to the channel. Good for you. You're doing your homework. But I still hope you guys keep continuing to follow me, because you see these things. We're going to go to mortgage rates for today. Look, they just went up an eighth within the last hour. Okay, that's crazy. Okay, but yeah, we would love to help you analyze all this stuff, lock in at the right time, do what's needed. But yeah, thanks Irish Talks. I was before I did this, I tried to scan it to see if they updated their rates yet, and they didn't. So let's go to the next one. We got Bibo. Do you think the rate will continue to increase? What's your expectations? I truly feel that they should stagnate. Let's just go back a little bit. Pre-pandemic, we were in the fours. Okay, we were in the 4.5 range. And then what happened? Why did we get to 2.99, such like that on a 30-year fixed? I refinanced my home a year and a half ago at 2.625 on a 30-year fixed. Well, as Irish Talks just showed us, mortgage rates today are 5.625. So I did this 6 months ago, my own personal loan. I'm 3% lower than today's rate. Okay, take that into perspective. Okay, but where were we? The pandemic hit, and that's why rates got to the lowest levels ever in history. Okay, now we're recovering, but we overdid it. Okay, so let's say you indulged in, I like to use analogies. Let's say you indulged in overeating for 2 years, and then all of a sudden you realize, hey, I'm way overweight. I need to lose weight. Well, it's going to take you time to lose that weight. You're not going to, in 2-3 days, in a week, you're not going to lose all the weight. So we're steering a huge barge here. So the economy's got to kind of pivot and move. And that's what the Federal Reserve's trying to do. But the markets between, Twitter and Facebook and YouTubes and everything, and all these things, the market acts and reacts fast. So to answer your question, I think we should start to stabilize, because we're 3% higher than where we were a year ago. That is fast. Okay. So, but thanks for that. I can only give you what my assumptions are, what history is telling me, and what my experience is telling me. And that's where I'm letting you know. Some of it, yeah, I don't know. Even the Federal Reserve chairman yesterday says, guys, it's big pivots that we got to face every day. You got the coronavirus, we had the pandemic, the world shutting down. Now we have the Russian war, inflation's out of check. North Korea's creating bombs again. We have China maybe invading Taiwan. We have this, we have so much going on that it's crazy. So where things are going to settle, I don't know, but it can't get too out of hand, because the markets can't handle it right now. The job market can't handle it right now, and manufacturers can't handle it right now. Everything isn't good. Okay, the housing environment is crazy, but the rest of everything has a lot of cracks in it. So let's go to anything over? No. In eccentric in California. What you might want to do, I like teaching you guys this stuff. Go in and see in your county, just go in and see what's the loan limits, the maximum conventional loan limits, and put in your county. And it'll tell you, there's many parts of the country, California, New York, those are the two main areas, like Southern Miami or Florida, which is Miami and so forth. They have the standard loan is $540,000. And then over that is normally considered jumbo. But many areas of the country have what's called high loan limits. So there's that 540 figure, and then they'll give you a higher loan limit all the way up to X, and that varies by counties before it hits jumbo. So it's a little piece between the two. But if you want to email me in that email, I'd love to look it up for you to let you know what's out there and what you're looking at. If you would be considered a high cost, or if it would be a jumbo. But my email is right down below. Email me. I'd love to answer your question. Next question out there is 20% down the normal for an investment? How do you put down less. We have actually a DSCR program, a debt service coverage ratio. Those usually require 15% down, and it is a simple program. Basically, the house has to just fend for itself. So let me explain it this way. So Mike, if you own other real estate, you probably know it's in many cases, it can be difficult to apply and get approved for another investment property, especially last year. If you had a lot of tenants not paying you, or your finances were down because of that, the DSCR program that we offer is basically this. As long as the property debt service itself, so DSCR, debt service coverage ratio. So as long as the rent you receive from that property covers the mortgage payment, 1-to-1. So if the mortgage payment is $2,500, and if the rent you receive from the property is $2,500, you're good. So those are usually with 15% down. You do have to have a pretty decent credit score for that. But that's it. We don't need tax returns. There's a whole bunch of things. We're basically saying you're an investor, the property pays for itself, you put skin in the game, you can get a loan. So that's the best way to do that. How you can find out more and more about that program and more, just go to our website, therateupdate.com. We have a lot of stuff there, but you can chat with us, you can call us, or you can even email me, and my email is down below. So let's go to the next one. I'm seeing a lot of more houses coming back on the market, presumably because the rates are going up. Pricing people out. Yes, and I've had conversations with realtors all over the country. So if you're a realtor, please email me. I'd love to interview you. We can put you on YouTube Live. We don't have to put you on YouTube. We can just do a video, or we can just talk behind the scenes. I had 3 interviews this week so far, actually 2 in the last 2 days, on the East Coast and on the West Coast and in the middle of the country. Here's what I'm getting from a lot of realtors. And if you're seeing differently, call me. I will answer the phone, I promise you. If you ask for me and you say you're a realtor, you want to discuss your market, love to talk to you. So what's happening right now that we're seeing from these realtors, the realtors out there is more houses coming on the market. Good news. We have less competition on properties. I was talking to a gentleman yesterday. He said the norm was about 30 offers per home. Now we're seeing about 5 or 8. And of those 5 or 8, people are not bidding the $50,000 and $100,000 and $200,000 over. They're usually bidding ask or maybe a little bit higher. So I think things are coming to there. Another piece of this equation is they're telling me more houses are coming on the market, which is great news. The time on the market is getting extended a little bit, which is good news. So there's a lot of good news coming out that's helping the market. And this is what I projected last year, but I thought we would see it by March. But there's a little bit of delay or slack in the system from that. So let's go to the next one. But thank you for the question. Again, guys, if you're on here, please give the channel a little bit of love. Give me a thumbs up. And if you have a question, put a Q in front of your question so I know it's a question. Otherwise, it might be a comment, or maybe you don't want shown on here. So I'm going to go through each one for now. But going forward, yeah, put a Q there so I know if you want me to post your question or not. Do you do loans for agricultural zone properties? No. And we just had a loan, I think yesterday or the day before, that somebody hit. Actually, another broker ran into a brick wall, and they reached out to us because of all the programs we have to offer. And it's really hard to get zoned agricultural, even if it's USDA. USDA wants it basically. It's not a farm, but agricultural is really tough to do. But if you want to email me or a question in regards to that, my email is down below. I'd love to answer one-on-one with you. Bobo, let's see what Bobo has. Do you think the rates will jump effective for? Would that affect? Yeah, absolutely. What we're seeing right now, I'm trying to put a channel together or a video together to show you guys when you're building a house, don't let the builder make all the calls. Okay, these contracts that I'm reviewing for people because they want to either get out of them, they don't want to use their lender because their lender is actually owned by the builder and they're jacking up rates and fees and everything else like that. I have proof if anybody ever wants to, take this further. I can show proof of all the stuff that I say. So I got everything covered. But yes, it is going to majorly affect affordability as high as a lot of these are going. So again, about a year ago, I didn't expect rates to hit 6 when we were at 2.75. I didn't. I don't think anybody did. With rates going up, yes. But pre-pandemic was basically where all our charts or our mathematics were based off of. And those rates are about 4.5 to 5%. So all my projections basically said we should get back to normal. But this isn't a normal world, and we're not back to normal, and everything does change, and it's changing rapidly based on technology. So yes, it is affecting affordability, and a lot of people building homes now are checking to see if they can get out of it. The next thing is mortgage rates are going to 10% by the end of the year. I would love for you to be able to post something to show us how you figured that out instead of just saying it's going to go out there. What I don't like, and then nothing against you, I don't like just posts like that. I want some skin or some why. How are you predicting that? Where's your mathematics coming from? Where's your historic data coming from? But you're more than welcome to your opinion, but I don't see them hitting 10. That would cause huge freaking out in the markets. So Q, in case of new construction homes, can an outside lender be able to close a loan if the applicants are not in stock and the builder is expected to get installed after closing? Yeah, well, yeah. So the lender, the contract that I was reviewing for somebody today is basically the builder, they have all the control. They're saying, well, if our prices go up, we can pass on the prices to you. It can take us up to 1 or 2 years to finish your house. But once we're done, you have to close in within 30 days, or we're going to charge you a whole bunch of money and this and that and all kind of other things. So what happens on this is, in most cases on the construction loan, even if you read your contract, their lender probably can't even close you in time if everything isn't installed and you don't have an occupancy permit, because that's the biggest piece. When you're building a home, what happens is everybody working on that house, they file liens against the home, okay? Mechanics liens. So the plumber puts a lien on the home. The electrician puts liens on home. All these liens get put on the house. So at the end of the construction, we deal with the builder to make sure everything is reconciled and everything gets cleared. In regards to this, you probably can't close until everything's done, because you're not going to be able to get your occupancy permit, and you won't be able to get a final inspection if a lot of these things aren't put in place. So that's, again, you might want to reach out to us and get the 6-month extended lock program. Lock in, because we just saw today rates went up 1/8% from this morning to right now, and we are 1 o'clock my time, Central Standard Time. That's a big move. Okay, so the next one, question: credit unions are showing rates still at 3.5. Since they are different, what do you think? No, I mean, I would send me a copy of that, because legally they have to be able to offer that for you. But what you want to see is, how much are the costs involved? If I'm showing you rates nationally, so these rates that we post every day, these aren't my rates. These are rates from Mortgage News Daily. Okay, what they do is they survey lenders all over the country, and credit unions are involved. So if the average price out there, I'll say price, or the rate out there is 5.62. Okay, so my analogy on this one was, and I was actually quoted in Yahoo Finance about a year ago. I'll try to post that, down below that thing. Here's my analogy. Gas prices, they're $4.50. Well, they're $4.50 here in Chicago. It would be like you telling me, well, the gas station down the street has it for 99 cents. Okay, what's all involved? They can't give it to you for 99 cents when everybody else is at $4. Okay, what's involved? That's what I would ask. Do you have to, get a car wash, buy 3 pizzas, a hot dog, and a case of beer? If that's the case, okay, I get it. But 3.5 isn't even on the charts. It's not even available on an adjustable rate mortgage. So check the term. Did it specifically say a 30-year term, or just rates are available starting at 3.5%? Because that's legal, but it's kind of deceptive. Okay, it might be an adjustable rate with 2 points. Okay, similar to what we see over here. Even the 5-year ARM nationally isn't at 3.5%. So I don't know how they could possibly be doing that. But I appreciate the question. Get your mortgage now before the rates come in. You're bent on that 10%, which, God bless you, man. Okay, so last chance to get in under, but okay. You guys get 4.875, zero lender credit. For zero lender credits, 5% for $1,000 lender credit. What's the best option for a $450,000 loan? Send me your loan estimate. Let me see what I can do for you, Because if you're getting offered this, I might be able to even do better. But I'd have to do the mathematics, how long you plan on staying in the property. Here's my assumption on a lot of this stuff. I'm actually advising a lot of people don't pay a lot of points right now. Why? And here's the reasoning behind that question or that answer. We all know that the markets are messed up. The economy's messed up. The employment numbers are messed up. We're probably going to go into some kind of recession. In a normal recession, mortgage rates drop between 1 and 1.5% on every recession we've ever had in history. Okay. So if you go in now and spend $5,000, $8,000, $10,000 to buy down that rate, let's say 6-8 months from now, we go into a recession and rates go to 4.5%. Well, you could at that time maybe get the 4.5% you're getting now and not have to pay the $10,000. So basically, once you pay that $10,000, it's over. They got your money, and if rates go down, you just blew it. If I saw the economy robust, everything is peachy, and there's no vision in sight that the economy is going to have some hiccups, I'd be like, lock in now, spend whatever money you need to, if depending on the time duration that you would be in the property. In today's markets and all the things that I'm seeing, and all the economists and everybody in Wall Street saying we're probably going to see a recession. Could it be big? Could it be small? But we're probably going to see one. I would highly advise don't pay a lot of money in points right now, because what we do is once we close you're on our radar basically forever. And if there's any time that we can maybe drop your interest rate 0.5% or 1% or whatever, and the opportunity presents itself, we'll be reaching out to you just to give you the options and giving you the numbers so you can make an educated decision. But that's my answer on that one. Whom's only go up? Stonks only. No clue what that means. What do you expect regarding the housing market from here to 2023? So my expectations and my talks with a lot of realtors in the market, from the Carolinas, middle of the country, Florida to the West Coast, they're all telling me there's more houses coming on the market. There's more supply. Builders are finishing up their building. Supply chains, yes, they were messed up back when. They're still messed up, but houses are starting to get completed. Okay, so we have now supply going up. We have demand still basically the same or maybe lower. So when you have higher supply and an equal to or less demand, that brings down prices. Okay, so that's the hope of a lot of this. But again, with all the things that move like that, between Twitter and the internet and everything else, things move like that. We don't know. And the uncertainties in the world, not only in just our country, but in the world in general, it's making all this really hard to gauge. But I greatly appreciate your questions. Please, again, give us a thumbs up. Did you hear the wah, wah, wah again? We go over to here, and more people are raising their rates throughout the country in regards to lenders. So if you're just joining us, this is what's going on in the MBS market. We are cratering. We're down 72 right now. It's basically what we picked up yesterday. So where we started, or where we were yesterday at this time when the Fed came out, was right here, and we're right here. So this blip in the radar was about 24 hours lived. So what this is the mortgage-backed securities market. As this goes up, rates come down. So this is what happened at the close of the day yesterday, and this is what's happening today. So let's go to the one-day chart, and I can show you how we fell off a cliff. Okay, so now we're starting to neutralize. We're starting to balance out here. So let's show you this. Basically, we've given back everything that we gained yesterday. So here's where we were yesterday at this point, if you can see my lines, and we're back to there right now. So it was short-lived. And that's why we always say, apply. Put your application in. So if we see an opportune time we can lock you in, we can lock you in. So let's go to the next one. Man, you guys are asking a lot of questions. I greatly appreciate this. I am starting a Roundtable Tuesday, or a Table Talk Tuesday from 1 Central Standard Time every Tuesday. I'm going to be live doing this. So join us on Tuesday afternoons and Thursday evenings. We're having YouTube Live tonight. We're going to talk about how to choose a lender. As a first-time home buyer, with such limited options, should I settle for something now or give a few months to see if there's more options? I don't know what you mean by options. I'm assuming homes. I would keep looking. What do you have to lose? Find a good realtor in your area. if you're a realtor out there, we're trying to build our database up to our realtor referral program. So what will happen is once we get you pre-approved, if you don't have a realtor, we're going to set you up with a realtor that's vetted and that knows what they're doing and is local to the area. So you get the best person in that area to work with. Okay, so don't stop looking. You might find a needle in the haystack. You might have a house that was ideal for you that went under contract that now fell out because the people can no longer afford it. They no longer qualify. So now you might be able to pick up that house. But if you're continuing, just continue to monitor. You never know when you're going to find that house. So that would be my guidance. I'm trying to buy a house for 1.2 million, 20% down, 70. Think I can get a good rate? Los Angeles, absolutely. We scan, basically what we do is we scan the whole country of over 100. There are over 130 lenders. We do all your shopping for you. You go into like Lending Tree and all these companies out there. What they do what we do, but what they do is you put in your data and they sell your data to 10 or 12 places. Now you have 10 or 12 places calling you and calling you and calling you, and everybody's promising you the world, and half of them it's BS. They can't even do what they say they can. I'm going to go out there and say that. They're just trying to win your business, have you sign and move on. So I'm completely transparent up front. We tell you exactly where the rates are. I show you right here what your costs are and everything. And then again, we scan your system. We do it. So there's one credit pool. You're dealing with one person and you're getting the ability to shop over 130 lenders, the biggest lenders in the country. You got nothing to lose. Okay, so Eccentric, if you would email me that loan estimate, I will help you personally. I promise. I'll get between mine and my assistant, we'll get you taken care of. I promise you. Go to the next one. Will my rate go down if increased my down payment? Yes. So here's how mortgage rates actually get created, or how are they calculated. The biggest piece of your puzzle is your credit score. So when we pull your credit score, we're going to look at it to see if there's any opportunities for us to help you increase your credit score. Okay. The next thing is what we call the loan to value. It's the loan amount divided by the value of the property. Okay. And that's basically your down payment fills up the difference. So the more money you put down, the lower the rate. Okay. But it has to be in increments of like 5 or 10%. If you go from, putting down 5% to putting down 6%, or you go from 6% to 7%, that's not really going to make a change. And many times what we'll do too is we'll check the rates. If there's not a huge difference in rates, I'm a cash cow. I love holding my cash so I can do with it what I want. So we can give you options. If you put 20% down, you put 25% down, you put 30%. So we can give you a arrangement of, what the rates would be. You're starting to see all these lenders right now starting to repost, and you're seeing this across here. This thing is going to light up. And every time you hear a womp, womp, that's a lender reposting their rate sheets. But yes, by putting more money down, you should get a lower rate. I'm going to wait at least till 23 to jump back in the real estate market. God bless you. Yeah, that's why it's a great country, because you can do whatever you want to, because it's your preference. Next one is Sean Nyberg. Do you think Amazon are a good buy in this market? I am not a stock advisor. I'm not a stock. I don't recommend stocks. I'm not a financial planner. I'm not giving you any recommendations on YouTube. I got to do a lot of stuff to protect my butt. But just go in here. I like both these companies. Between Amazon, we know what's going on with Amazon. There might be a good opportunity there, because I think yesterday the stock dropped 12% or more in the last 24 to 48 hours. Tesla, the good move there is, I'll just give you my feedback, because I'm in this and cryptos and everything else, but I don't want to answer those questions here. I'll just answer this real quick. Tesla, the good news is that the technology with their cars, they're getting a lot of data for all the electronic cars and GPS. Another area that a lot of people don't understand is the fueling station where you charge these things. Tesla owns a lot of that. So as more and more and more electronic cars get developed, you're probably going to be using a Tesla station or some sort of it. So that's a cash cow there as well. But as part of it, be the best time to buy a house, 2025. Okay. Okay. Let's go on. Hey, Dan, we closed on a new build. We're using the builder's lender. Should we lock in July, August, or should we take a chance and use it down during those months at closing? I guess what I would ask is why you're using that lender. Here's the norm, and I'm going to post a video later today from a contract that I reviewed with a client today, because the lender or the builder said if you do not use our lender, you have to put down 15% more as a down payment. It's nowhere in this contract. And in the contract, though, I'm highlighting that the builder owns the title company, 100%, 50%, 49%, take that back, of the lender, okay? And then they also own a piece of the insurance company. Okay, so they're making money from all avenues that you have. So by them, giving you a credit to use their lender specifically that they probably own, I don't know how it meets the federal guidelines, because it is purely steering. You're saying you can't give anybody anything of value for them to use a particular service or company, and they're doing exactly that. They're saying we're going to give you a credit if you use our other company. That's illegal. Okay. But I don't think there's a lot of complaints, but there's going to be. I'm trying to make an uproar of that. So I would first ask, can you use us? What are you, by using the builder's lender, what are you getting and what are you losing? Meaning, are they paying, are you getting $3,000 back, $5,000 back, $10,000 back if you use those lenders, and only if you use those lenders? What's happening in most cases, they're going to have you wait until 30 to 45 days out from closing. You don't have time at that point to shop around. You're going to be stuck, and then you're at their mercy. They might give you a higher rate than that's normally out there. They might charge you additional fees than they otherwise would. And I know this because I've talked to their loan officers. Okay, I've talked to them, so I know for a fact it's going on. So the next thing is eccentric. 10% will kill the. I agree with you, Georgia. Take up a feasible estimate of when will be a good time to invest with 20% down. Investors are still buying and buying and buying because your return on equity, you can see, I posted a video yesterday. The average Zillow did a survey of rents all over the country from February of 2021 to February 2022. The average rents went up 16.7%. And in bigger markets, they've gone up in some areas 28 to 30% in a year. So you as a landlord might have the ability to go in and buy it up and so forth. I talked to Sir Ashley. He's a great realtor in the Carolinas. And he said down there, you can buy a house cheaper than you can rent. So it depends on your markets. All this is dependent on the market where you are. Okay. Next one is, I don't have a moderator, so please watch what you say. Just pay cash for the house. Easier said than done. Eccentric, what's the difference between contingent and under contract? There is a home I am eyeing and I hope the deal will fall out. Contingent means there's some other piece of the puzzle that needs to happen for this to happen. So let me just put it in context. They can buy this house that they want to buy contingent to them selling their current home. So if you went into that contract or went to that realtor and say, I can buy this without any contingencies, I can close within 2 weeks, you might get that property because there's normally a kickout clause because they don't know, the seller doesn't know, one, if the buyer of their property is going to ever sell their house. And if they don't, do they qualify? So that might qualify the buyer or not. So I would get a hold of the realtor or have your realtor get a hold of their realtor and ask them, can I still put an offer in there even though it's under contingency? There's a contingency. Under contract means the buyer and the seller agreed to sell the property at X amount of price, but the contingency piece means there's strings attached for the transaction to take place. So great question. I just paid cash for a property in the hood. God bless you, man. You had the cash. Anybody that paid cash for a property, if you want to pull out that cash, we have a program called delayed financing. You can do that within 6 months and get all your money back, basically, on that property, or a percentage of the house's value and so forth. But if you want to recoup your money back to finance that and then use your cash to buy another property, because then in that case you won't have any contingencies like the last question was. You just heard the wah again. But good for you. Let's see. We're getting really specific questions. In October 2021, our score was 5.87 and gave us 3.5 at the same score there. And now 5.75. Lender didn't want to pull credit, but is up at 650. Is that going to bring that percentage down? FHA, by the way, no. Once you closed, did you close in October? Our score was giving us no. There's a bunch of pieces to this puzzle. So what we do is we lock you in. Let's say we lock you into our extended lock or the lock and shop, but in that whole time, we're working on your credit. So your rate is locked into the rates as of that day. Okay, so let's say they locked you back in October or whatever, or you applied in October. Your score is 597. If we locked you in, let's say we locked you into an FHA loan, your score is 597. And now we're getting ready to close you. You were on an extended lock, but your credit score is 650. We go back to that rate sheet the day we closed you 3, 4, 5, 6 months ago, and we get that rate, but at the higher credit score. So yes, that credit score or that rate should go down if they had you locked in. All right, that's that question. Ask for a friend. What do you think rates will be in September? So thank you for posting. I see rates getting in the short term up to about 6, maybe a hair over that, and starting to stagnate. It's hard for me to say what September is going to bring, because by that time we're going to have 1, maybe 2 or 3 more Federal Reserve meetings. It depends on what they're going to do in the economy. I think the economy is starting to show cracks now, and I think by the 3rd or 4th quarter of this year, we're going to see more and more cracks. And if we hit a recession or recession-ish economy, you're going to see rates are going to have to kind of start to stagnate, because the housing market is a huge piece of that puzzle. You might disagree with me. God bless you. That's why you have that opinion. I'm going to just start going to people that haven't asked a question. I was quoted 3% rate through a veterans program. I don't see. Ask for a friend. You can see here, I don't know who gave you the 3% rate quote and what it all consisted of. If you would, do me a huge favor. Ask that company to send you another email or a new updated loan estimate or some paperwork to show the rate, the term, and the fees, and email it to me. Honestly, within an hour of you sending me that email, I'll send you a reply back telling you what my thoughts are, or giving you some good or very bad news, and how that rate they're quoting you isn't. I don't see it being there, because right here is the national averages. These are not my rates. These are the national averages. You can see right here, these are government-sponsored loans, which are FHA, VA, and USDA. It ain't even close to 3.5. Okay, these are the national averages. Okay, so that's why I post these things. But great question. But if you can get that from the lender, get it in writing, the quote they're offering you, I would love to dissect that with you. Do you have to take the money management course for the FHA loan when your score is under 720? So many. I just realized I talked to you personally. Yeah, give me a call. Today might be tough, but if you call in tomorrow morning sometime if you would. The number is down below, or 844. You got it. Ask for me. I'd love to talk to you. Many times I'm in closed doors, doing videos, doing meetings, doing Zooms, doing this and everything else. So sometimes it's tough. But email me. Email me your phone number, and I can call you when I have the time, either later today or tomorrow. And my email is right down there below. It depends. Not everybody needs to take a course, but if you have to take it, it's like a 10 or 15 minute thing. You can flip through it, and you can pretty much do it fairly simply. The next thing is, can I rate lock a VA? Absolutely, you can. Give us a call. Here's my website. Is it up here? I'm going to go to therateupdate.com, and all my information is right here. You can give it. The best thing is call. It's not hard sales. The one thing I hate calling people on the phone. Why? Is because you just get pounded. Even if you're trying to cancel your cable bill, they pound you. We don't. All we're going to do is tell you what our opinions are, what we can offer you, and then leave it in your court. Let us know if we can help you. God bless you. Check, do your due diligence, but reach out to us, because so many people are getting taken advantage of it, and that's why I do the show. The next thing is question: can a lender charge you a broker fee for your, can a lender charge you a broker fee for your agent? I'm assuming, can the lender charge you a yeah. So here's how most of the things work. We as brokers, we go through a lender. We get discounted everything because we have to give them enough volume to stay in business. So think of it as Costco or Sam's Club. You go to Sam's Club and you got to buy in bulk. Okay, that's basically what we do. You go to a Kroger's, or we have a Jewel here, or wherever. You go into just a standard store and you buy one loaf of bread. And you're paying a high cost for that because you only need the one. It's convenient, everything else. But if you do in bulk, let's say you go to Sam's Club, you buy 2 or 3 or 4 loaves of bread, you're getting that amount, a fraction of the cost. That's how we as brokers do it. So what happens is, in most cases, the lender's paying us a fee. So when you see your loan estimate or your disclosures, you're going to see a broker fee. Let's say it's $3,000. Then you're going to see over to on the loan estimate down on the bottom of page 2 to the right, you're going to see lender credit. $2,000 to wash out that cost. So basically it's just a wash is the best way I can explain it. So I think that might be the question that you're asking. Let's go to Dawn. We are building a house, but have been told 360 and the foundation is poured, which they're saying will be to, do we have any other options? No, you got to wait. You can go over, some places offer a 1 year or a 2 year rate lock. It is so expensive. The 1 year rate lock right now with most lenders is going to charge, they're going to cost you 2.5 to 2.75 in points. So just take your loan amount and multiply that by 2.75%. That's how much it would cost you just to lock in the rate. Nothing else, just for the lock. Okay, so what would probably be a better option for you is to wait at that time. Even if rates were 7.5, by the time you buy it down, you're probably going to be at today's rates anyways, unless rates just go crazy. But unfortunately, that was one of the things in the contract that I reviewed today with one of the builders, is they actually proposed to the buyer that they could take up to 2 years to build the home. Guys, I understand people need a house. You don't know what 2 years is going to do. So I wouldn't be a proponent of building a house and it taking 2 years to get into. I'm going to answer a few more, then I got to run. I apologize. Because they take care of all their closings. Yay. They own and all. Okay, so I think I know you're talking about. My licensing, just so you guys know, I'm working on it. I should have everything resolved probably within a week or two, that we will be licensed in every state in the whole country. So in the meantime, reach out to us, give us a call, do a chat, do something right through here. We'll take down all your information, get you prepared. So when our licensing comes through, we can immediately get to you and say, okay, here's what's going on. Here's how we can help you. But yes, please call in. The best way to find us is, let me go to that banner and give you all that information. It's right here. And we would love to talk to you. Next question, I'm going to answer a few more. Yep, 30, 45. Yep. I'm going to go try to find somebody that I didn't answer. Irish Talks, you did a good participation there. We have a rate lock in place. I'm feeling our builder might not be done by expiration. Is there a typical range in cost? No. Some extensions are ridiculous and some aren't so bad. But if you're using the lender's preferred lender and it's an affiliate of the builder, I would almost guarantee you that their cost for the extension is going to be stupid. And when I say stupid, I mean high. Let's see. We paid 1% for $399 in March. Great. That's awesome. And hopefully you learned a lot from my channel. Our new home will be done in September. Should I shop now and lock the rate? Approximately what will be a fee for locked in this rate? September. Let's say we're in May, June, July, August, September. It's you need a 120-day lock. We can lock you in a rate now, and there wouldn't be any cost. The rate is dependent on your credit score, the loan amount, the house value, and a whole bunch of other things. So how you do that is just give us a call or go to our website, schedule a meeting with somebody, apply online, or just call in and we can tell you exactly what's what. But yes, we can lock you in right now. There's no points or anything involved in that. There's basically no skin in the game. So we can get your application and lock you in now so you don't have to worry about rates going up. If rates do go down, we can actually negotiate with that lender a lower rate, or we can move you to another lender at that time that has better rates on that. So that's all I'm going to answer for right now, guys. If you have any questions and I left you hanging, join me tonight, 7 o'clock, 7 p.m. Central Standard Time. I will have a YouTube live channel that I'll be picking up on this. We're going to talk about how to choose a lender, and then I'm going to go back to this format to answer any and all the questions that you have. So if I answered your question, all I ask you to do, I ask one thing, one simple thing: give us a thumbs up. And it helps the YouTube algorithms just get us recognized a little bit more. That's all I ask. So if you need any of our help here, please call down below the 800 number, go to our website, email me, however you need to. I'm here for you. And that's why I do the channel. So God bless, guys. Thank you so much for watching. I'll see you tonight on my Facebook live event at 7 p.m. Central Standard Time. Otherwise, I'll have a post in the morning letting you guys know where mortgage rates are, what's going on in the market. Take care. Thank you so much. I will see you later tonight. Bye-bye.